Hey friends, welcome back. I am joined today by Oynes and Colin Tip with Guild Mortgage. Thank you, gentlemen, for joining us. We are going to talk about private mortgage insurance, or PMI, something that happens on a lot of loans, but a lot of people have no idea how it works or what it is or how they get rid of it either. A lot of people think they're just stuck with it.
Yeah.
So I guess first and foremost, we're going to go through a few questions very specific to PMI. First and foremost, what is it?
Mortgage insurance is a monthly payment that you will make through a mortgage insurance provider that's insuring your loan for that monthly payment. They get added to loans that are under 20% down payment, and different loan programs have different types of insurance, but PMI would be more geared on conventional loans. It's a tiered system, so the lower down payment is, the higher the mortgage insurance is from a risk standpoint. Once you get up into the higher ranges, closer to 20%, that amount's going to come down a lot. Also, when you get to 80% loan to value, so 20% down, you will have no mortgage insurance, so you can reach out and have that removed. If you don't reach out and you just keep going, it naturally falls off with Guild at 78% LTV.
Now, when you say 80% loan to value is where they can ask for it to be removed, that is based on the original purchase and loan number and then what they've paid down, correct?
Yes.
So what if their equity has gone up in the meantime? Say the equity's gone up 100,000 over 2 years, which is not out of the question. What does that process then look like if they hit 80% based on that new value or kick PMI off their payment? How does that work?
You can either go through a refinance process if rates are better, then that would make the most sense. We'll get a new appraisal on the property to show the new value, the current market value, and then based off their current loan balance, they've got the 20% equity. We'll take that off as part of the refinance. Or if they want to pay the loan balance down by a little bit to get to that 80%, they could do that too to make that work. If rates are the same or higher, let's say, and Guild is servicing the mortgage, then they can actually pay for a third-party appraisal, show the value there, and then they can request from our servicing to get it removed.
Nice. It's a fairly straightforward process. Do they work with, you guys say you did wrote their original loan? Do they work through you guys to do that?
We'll kind of coach them along that. Like we'll work with the client and with the servicing department to figure out what's the best method to go about it. So,
yeah. That's one thing that I do with all my buyers when they close is I track every year what their values are and what their original loan amount was. So we can kind of see where that converging point is. Because if you just wait until you've made 20% of payments or whatever it is,
that's a lot.
That can take years. Again, in a market that we're in where these values are going up so much, you're going to hit your 80% way faster in equity than you are in payments.
And we do track a lot of our clients through our database. It shows us, when they're reaching to that point. We'll send like an email out with, a little instruction on if they would like to do something like that. So
that's awesome.
Yeah.
And then we pretty much hit most of this. Are there any costs associated to removing the PMI when it's able to be removed?
Through like just the servicing of it or through refinancing?
Probably through the servicing, because refinancing obviously is just going to have the...
Yeah, so that without the appraisal, if there is any cost to it, I wouldn't think
so. The only cost to it is just the cost of the appraisal.
Okay.
So they'll give them the list of some approved appraisers through our panels. They can't just call up their appraiser and slip them go $100 to make sure that they get the value they need. So they have to be a vetted appraisal on our approved panel list, but that's kind of, standard. Have that, they'll pay for them directly. They'll send the report to us and the appraisal will send directly to Guild. And then if that works, we'll get rid of it. The intent of the mortgage insurance is to respect the lender. It's not something that's supposed to be a detriment to the buyer. Obviously, It feels like it's a waste of, it doesn't really go anywhere for the client. But it's in the event that there's less than 20% equity, it protects them in the event of like a foreclosure situation, right? So, but the nice thing about mortgage insurance nowadays is it is tiered also off the loan to value, like Colin mentioned, but it's also tiered off of FICO score. So if you have a really, really good credit score, your mortgage insurance, it can be significantly better than somebody who maybe has a lower score, like, in the 600s, right? And so sometimes if you have 10% down, like I've seen mortgage insurance be like, $40 a month.
That was actually going to be my next question: is what do those numbers look like for mortgage insurance? Obviously, lowest 40.
Yeah.
I've seen $22. I've seen 40, 50. I've seen people with horrible scenarios coming out at 500. So it just really depends. Which those people typically, when they have that high of mortgage insurance, it's probably a program issue to switch from conventional over to FHA because they're going to be a lot more friendly.
That makes sense.
Yeah. FHA dropped their mortgage insurance almost half of what it used to be.
Wow.
So it used to be 0.85% of the loan amount on a 500,000 loan. Roughly 1% would be 5,000 divided by 12. So that's about $400 a month, right? Now it's 0.55%. So that goes all the way from approximately $400 a month to roughly a little over $200 a month, right? So FHA more insurance. We use FHA sometimes more often now because of it being so much less than it used to be on conventional. You kind of want to just always compare the two and what's going to be the best loan program for the client, not just, well, they got good credit. Because even if you have a 700 FICO score, sometimes FHA, because the more insurance is just set at 0.55, can be better than shopping it around on the private markets. And so what we do is there's like 10 different major mortgage insurance companies. And so we kind of have I call it like the Travelocity mortgage insurance, plug in their scenario, press go, and we just pick the shortest one or the cheapest one. So it just helps we don't really care who it goes through. It's the same.
Just got to get done.
It's got to get done. It's got to be on the law.
I think one thing we kind of missed too when we're talking about removing it with the 80% LTV loan to value or 78%, that's for conventional, correct? FHA doesn't drop off.
Yes, that's correct. That's correct.
See, the only way you get out of FHA is to refinance.
So you got to refinance off FHA onto conventional.
Yeah. FHA is a government loan that it's included in the whole loan.
Gotcha. Even if you put 50% down on the time that you purchased and you did an FHA loan, then more insurance will be there no matter what.
Which is probably why they're a little more friendly to some folk.
Yes, but that is right now probably not as big a deal because refinancing in a couple of years is probably going to be to your benefit,
right,
with rates. But if you bought whatever that was 3 years ago and then rates started going up, you wouldn't want to be in the situation where you had to refi into a higher rate. So
yeah, and you can kind of look at it like if you had an FHA loan at 3.5% and you have FHA mortgage back then was probably 0.85. So you really have a 3.5 plus 0.85. So you still have a 4 and a rate, which is better than where current market rates are. So we've had clients call us, say, hey, I want to get rid of my FHA mortgage insurance. I'm like, well, you have a 3% mortgage rate. Well, so that mortgage insurance, just keep your FHA loan. It's better than refinancing to a conventional rate at high 6s, low 7s, right? So
absolutely. Is there any way or how can homeowners track where they're at with their mortgage insurance? Is there any easy way, or is this like manual calculations? Do they get something on their statement that says, hey, call us at this time? Or
with your lender, pick a lender that you have a long-term relationship with that is going to be there as an advisor to you and help you. We do annual loan reviews for our clients. We're always checking in annually to, hey, you're on a great mortgage, you shouldn't do anything, or hey, looks like your appreciation's gone up. Maybe we should take a look at your mortgage insurance.
Mm-hmm.
Do you want to set up a call to kind of go over that in more detail and put together an analysis for them and see if it makes sense or not?
Yeah. I would say servicing, like a lot of lenders out there, so sell your loan immediately, and then you're going to have to follow whatever servicing, rules that other establishments have. So if you're serviced by your lender, like we service our clients, then you're our clients for forever.
Yeah, you're keeping your.
So we can
so they're alone.
Yeah, so we track all of our clients, and we have a big, robust database that helps us do that. And so we definitely we see a lot of benefit to servicing loans rather than just brokering them off to other banks.
Part of that's because Guild's been around for 65 years. That we've withstand the ups and downs of the mortgage industry. When mortgage companies get loans, they make money when they sell the loan. Guilds just keep on adding onto their servicing portfolio because the servicing portfolio also, over a long period of time, ends up paying off dividends too.
Right.
So they've kind of built the business model for like the long haul rather than like, let's get immediate short-term cash by, funding a loan, selling it, and then getting that money.
Right.
So the nice thing about it is like I can pull up my cell phone and put a client's name in our CRM, and I'll know the exact current balance of their loan, their interest rate, their mortgage insurance, all that stuff. So people will call on the fly, and it's like they don't have to call the 1-800 number.
Right.
Person that they don't have a relationship with. So
on the East Coast that left work, 2 hours ago. And
yeah, it'll be a lot harder if you're being sold around to different banks to track your LT.
to even know what bank you're at sometimes. What about, I know you guys aren't like your primary business is purchase loans, but what about refis? If somebody is, say they did get a loan with somebody who sold it and they don't even know where their loan is at, can they call you and, hey, we're interested in refinancing? If our loan value makes sense, we want to remove PMI. Is that something you guys can help them with, or what do you recommend they do for that?
yeah, we can definitely point them in the right direction. Sometimes it might be to refinance with us, right?
Mm-hmm.
So we'll help them. We'll gather a few pieces of documentation. Mainly if we can get a mortgage statement, maybe a settlement statement, but ideally probably just a mortgage statement. The settlement statement is that statement that you get when you close on your transaction. It's a 2-page document that has all the fees, the rates, the terms, everything like that. But if we can get both those, we can easily kind of point them in the right direction. And sometimes that direction might be, hey, go back to your current servicer and see if there's something you can do with them. Hopefully that's not the case. And hopefully, hey, we can help you. But if not, then we always try to do, what's in the best interest of the client. Yeah.
Cool. Well, I think that's it on PMI.
Lastly, though, what is a refinance? I don't know what they are anymore.
No kidding, right? Who's refinancing right now? I know.
They're coming back. Great for coming down.
Are they?
Talking about today, going from 7.25 to 6.6.
Yeah, I guess we are kind of there, aren't we? It's been a couple of years since they went up. We're getting there. Fortunately,
We all have
about
our
3 or 4
opinions.
years ago.
I think that they will come down to a certain degree. I don't think it's going to be some sort of crazy thing like we have seen before, but I do think we're going to find a healthier range for more of a permanent scenario for folks.
Yeah, I think we have to get there. Yeah. Well, thank you guys for joining me today. We'll see you guys at the next one, and appreciate it.